Tuesday. Welcome back to the final hour. This is Chris Pulver's 3 o'clock on the 29th of October. Let's get cracking here. Just got one trade to watch here for the final hour, 58 minutes to a close. P&L on the day is up. New fresh watermark highs in the portfolio for the year to date. That's good. A lot of that's thanks to Bitcoin, to be honest. IBIT that I've been dollar cost averaging into for the entire year at these lows and buying some equal lows. Those levels look pretty promising. So taking this swing, basically buying at these lows and dollar cost averaging a couple of times. So had some trades on pullbacks, trades on bottoms. Once we bottomed out here in August, add a little bit more, and then same thing over here. So 3 or 4 different dollar cost average positions, getting back near these highs. Bitcoin itself is pushing up towards that 73,800 level, which is right there towards my alert, which is right there near to all-time highs. This is getting very interesting before the election next week, and even with earnings this week. I hope this isn't a big old fake out, because if we get to this high and reject, then perhaps this is more of a building phase and accumulation phase like we had over here. All this could be some monster head and shoulders pattern as well. It's very possible that we have, this left structure, all this right structure that's still accumulating, but we have been doing this for the last 6 months. So if this is about to be a breakout, I mean, we can measure this move to this move, which is my symmetry. It's around 107. That's the targeted move for me on Bitcoin symmetry. If we have a fifth wave on top of that, then we're looking at something, even if it pulls back to past resistance becoming support, something up to around 130 or so. Gold is also at fresh all-time highs today. Another impressive run. Let's take a look at the overall top down. SPX up 0.33%. SPY up just less than that, 0.28 on the ETF. Q's up 0.98. NASDAQ continues to do its thing. NASDAQ all-time highs not that far away, around 503. NDX up 1%. Q's up 0.97. Dow is down on the day by 1. This is 0.21%. Russell's down on the day 0.37. So Dow and Russell underperforming. Volatility has come down on the morning. It was actually up a little bit this morning, up 3%, now down 2.27. So with the market going just a smidge higher, volatility index is retreating. SVXY still holding some longs and have some option trades there. Dollar index, lots of indecision, showing more signs that if there is some dollar weakness ahead, this is a good spot for those bears to be kind of defending their turf. Maybe it's up here with, we got through this big pocket area. I'm looking to see if this kind of chops around and starts to work its way back down. This is either a resistance area that's forming now, or we have one more surge into these previous resistance levels before I look for the dollar to truly start turning and topping. So not calling the top on the dollar, but I would say if we come back into this yellow box, so let's say we come back down to this area here, any type of pullback or even double top, I would be looking for opportunities to sell the dollar and see if we can retreat. Let's say this low to high, let's say we pull back, 38 to 50%. If we get a trade that's entered high enough, that's a decent start to get price into profit, eliminate all risk. And then if it wants to go lower, 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 then we let that run and we start canceling and replacing stop losses. So dollar index has a lot to do with, where I'm trading my currency pairs right now. But I've not been calling the top on this dollar index because it's right here, pretty plain as day. Support back in 2023 and this breakout point back in 2022 and 2023 that's been hit multiple times. Resistance around 107, support around that 101 handle. And from there, I just look to trade the big levels. Okay, oil still down about 1% on the day. We're trading at 67.22. The floor to me is being threatened. I think it will continue to be hit and tapped on and knocked on. Has anybody ever played the game? It was kind of like the Cooties game, but it was called Don't Break the Ice. Let me see if that's on here. Don't break the ice. There it is. This old school game. That's old school right there. Is that it? That's a penguin. That's this one. There it is. Milton Bradley. That's the old school game. I feel like that's what oil's doing. It's just tapping those lows, tapping the lows, and eventually I think that floor will fall. If we can't have basically a war in the Middle East that's raising oil prices, I don't know what's going to raise it. We've got heavy amounts of production. We've got supply side that's really, really as high as we've ever been producing as far as U.S. side goes. And I think this is a definite play to get inflation lower and keep inflation lower, which is another thing that we are seeing kind of running rampant. I don't love how this Truflation index looks. We are down to 1.01%. We're up 1.27% higher since the bottom. I am pretty nervous. Now, I know this isn't what we report from the government, and I keep saying this, but it makes me nervous to think that we're seeing a rip of about 1.27% higher in inflation. And here we are thinking that inflation is just going to be just trending lower. We're going near 2%. The Fed's going to get their target. I don't know. I don't think so. The bonds are showing us different things. Bonds are selling off. Yields are rising. That 10-year rising, that 10-year especially is probably the most concerning yield right now. The mortgage rates have gone up. The yields have ripped. And the market is definitely saying, hey, look, you want us to hold debt. You want us to hold bonds. You better pay us a premium. And so yields are on the rise, and that's not a good thing. So a lot of stuff happening that's inflationary. China stimulus is inflationary. PMI numbers rallying are inflationary. GDP rallying is inflationary. Non-farm payroll this Friday. We had JOLTS job openings. That was a miss today. Consumer sentiment was almost eerily high. We have PCE coming out on Thursday this week. We have non-farm on Friday. The bar is set really, really low for both. The Friday non-farm is only 108,000 after that big bust or that big, we had the summer scare back in June, July when everything was trending lower. We had a terrible amount of revisions to the downside. And all of a sudden, August, September, things got better where it's like, oh, look, it's, way above expectations. And the Fed totally botched the 50 basis points cut in September. Maybe they did, maybe they didn't. But this feels about right, meaning something's going to break. And I'm not saying it's now. I'm not saying it's in the next, 3 to 6 months. But I do think that the Fed, with as hard as they're trying to keep this transparency in the market and keep the market pretty much controlled and liquid and stable, I think the bond market has the opportunity to maybe break things and cause a little bit more disruption. And I think the Fed is possibly going to be reacting to things that the market's already telling us what to do. So inflation is running higher. I'm curious what that data looks like coming in next month, but I don't think the market cares right now. Right now, the market is essentially sitting on, we're near all-time highs. We're coming into the election. We've got 800 companies reporting earnings this week, but it could be a bunch of noise. I'm sitting in a trade right now in SPX, and I'm hoping it just kind of stays where it is. We have the final 50 minutes of trading. I could take profit on this right now. The probability of me getting fully out of this trade, I've got about 11 points left to go to the upside with an expected move of about 3.6 towards the final hour. Could we have a big push up to 585 today? Maybe. Hopefully not. Let me see if there's a gamma level or liquidity level on my chart here for SPX. We kind of already hit it. So the big level was sitting at 58.35. Hopefully we can settle in at 58.35 today. All right, I'm just going to keep an eye on this one. 58.50, 58.55, that's my strike. So I could go to a full cash settle position here for my credit. Looking for an end of day settlement of 40 cents per contract. Okay. Give us a real-time example over a longer time period. Let's just save that for the masterclass. We want to talk longer time periods. Let me use that for a masterclass for the daily profit play. We can talk other assets. We can use, higher time frames. We can save that for masterclass. The daily profit play. I'm running a sales webinar at the top of the hour at 4 p.m. I will share that link if anybody's interested in joining. I've got the link right here in my Telegram. So far, the daily profit play, just going back since the start of the course, we're 80 of 86 on the trades. That's pretty darn good. So we're hitting a strike rate right around, 80 out of 86, about a 93% strike rate. And traders are, taking full advantage. I pick and choose my battles. I like to trade in the mornings when typically the market is pretty quiet, and that works out really well for one or two trades in the morning. I took a trade later in the day today that obviously has, but probability-wise looks fairly decent to have prices kind of stay where it is, kind of calmly close around the intraday highs, and then tomorrow's a new day. So yeah, but I'm going to talk about that all at 4 p.m. If anybody is not in my daily profit play, it's a session that I run every single day at 9 a.m. Eastern time. We jump in, we do a little prep, we get ready to trade. Usually we're in the trades by 9:35 to 9:45. We try to wrap the sessions up around 10:10 or 10:15. I would say about maybe 50 to 60% of the time we're out of the trades in profit even before I close up the session. Otherwise, shortly after that, we're typically out of the trade in profit by around 10:30 to 11 a.m. Eastern time. So from that standpoint, it's a great trade and it's a great strategy to have in your toolkit. Speaking of trades and toolkits, I am making some good progress here. I just have a couple more videos to do This is a course that I'll be having published on my Discord. I will be sharing this for my VIP members and all my services. So if you are in my waterfall income strategy with a VIP or lifetime membership, I will give you this class, the full version. If you're in my daily profit play as a lifetime member, I will give you this full version. If you're doing a gold membership with the A1 trading bundle with my alert services, I will give you this full version. Here's a video walkthrough that I'm finishing up these fancy strategy videos. Basically, I want to give everyone the fastest track to learning options in a practical way. I mean, do we have to know every term? Do we have to know every nuance? No, but can you take a trade and be understanding the pros and cons, the reward to risk, the probability? Can you know all that stuff up front within a couple of hours education? I think the answer is yes, and that's what I try to accomplish with this course. So, practical options is coming to an on-demand video series near you. I'll post it in my Discord. I'll share this out. Like I said, for my VIP memberships out there, I will include this. But for anyone else that wants to jump in a crash course into options trading, I am basically giving you, I mean, look, I've got all the strategies here. There's 13 strategies in total, and I'm walking you through each one in meticulous detail to give you a nice, practical, pragmatic approach to if I want to do this strategy, here's a way to do it. Understand the reward to risk, understand the break evens, understand how to place this trade, how to execute this trade, what to expect when the broker is, if price is moving in your favor, price is moving against you, how to manage trades. I still think options are something that can 1000% help everyone's trading because you can trade so many different instruments. You can trade indexes, index ETFs, any ETF you want. You can trade sector ETFs. You can trade stocks. You can trade currencies. You can trade crypto. You can trade futures, oil, gold, silver, copper, bonds. There's so many things you can trade, and just a couple of basic strategies that you like a lot and you're comfortable using to find risk or undefined risk. It goes a long ways. So yeah. So and I get it. Look, if you're like, I don't want to learn options, it's fine. It's not for you. But I am in these sessions live every day. I'm running services around options trading. I'm managing a portfolio that is heavy amounts of options. And why is that? Because it's very easy to manage. My downside risk, my risk is always protected. I have the ability to hedge my portfolio. I have the ability to generate income routinely, and it makes my life a lot easier. So I let prices do their thing. I let the market do its thing. I place a lot of defined risk trades. I go after income. I'm pretty much product or asset indifferent. I just try to place trades that I think have a good opportunity and probability to make me money. And if they do, great. If I don't, great. But typically I find a way to carve out more winners and losers and make some money, and it's pretty simple. So that's why I'm doing practical. I want to make it so if you've never traded an option before, let's make it easy, right? Okay. My debit closing price has been set for the past 2 hours. Still not closed. What can I do? So where you at, Mark? I mean, I'm in a position here as well. So I'm in for a 40-cent credit that's trading down to 10 cents right now. It's clearly at a profit target. I mean, I'm over a 50% take profit, but I took the trade with the intention of risking the entire $5. So I'm looking at a 460 risk for a 40-cent reward, which I know is backwards, but you can see the probability in the final 45 minutes. As long as price is staying below 58.55, I'm just going to let this expire and cash settle with my full 40 cents credit. So, I mean, as long as your strikes are out of the way, Mark, where things are looking pretty good, I don't know. I'm holding the trade until close. I mean, right now it's trading at 5 cents. So as long as price doesn't do anything silly here in the next 45 minutes, I should be looking pretty good. Trying to close out at 20 cents. Okay. Did you take the same trade I did for 40 cents? I mean, 20 cents is the ask price. You should be able to get filled at the ask price at 20 cents. It got burned yesterday. So, okay, gotcha. All right. Well, I mean, here's the deal. I did a 5 wide on this trade in particular because I was willing to risk the entire spread. So if I get burned on this trade, I'm only 1 strike wide, which means my max loss is going to be $460. Does it sting? Yeah. Is it annoying? Yes. But is it the end of the world? No. I mean, if I was 10 wide, 20 wide, 30 wide, for that extra credit that I'd collect, that's thousands of dollars of risk on the same trade. So for me, I'm good letting this 40 go all the way down here and hopefully close today at 0 and give me my full credit. Okay. 70 on 5. Yeah. I mean, you got a lot more risk than I do, bro. So if you're trying to close it at 20, I hope it'll get there. I've shown the ask price right now at 20 cents. I just don't know what your spreads are if you're wide or not. So you got 70 cents on 5 contracts. How wide are you? Are you 10, 15, 20 wide in your spreads? And what is your bid mid ask showing you from your broker? That's the best way to tell. So, yeah, you're in for 70 cents. You're trying to close at 20 cents. What about 25? What about 30? You're over 50% take profit. So your credit's 70 cents on 5 contracts. You got some money. If you close out for, I see what you're saying. You're trying to get, 50 cents, right? 50 cents at 5 contracts give you $250. Well, if you take 30 cents, you still make 40 cents net, right? 40 cents, you're still making $200. Go 5 cents wide or 5 cents more debit, 10 cents more debit. So you sacrifice $50 and, make 200 on the day. 15 wide per side. Okay, got it. Okay, well, Godspeed, man. I mean, if it was my trade and I'm 70 cents on 5 contracts and I'm staring the difference of trying to close it out at 20 cents and it's not filling, I'd be okay trying to take 25. If you want to get out of the trade in the final, 40 minutes of trading, get out at 25 cents debit or 30 cents debit, walk away and move on tomorrow. Okay, my offer is being accepted. Price keeps passing by me. Got it. It could just be trying to fill, man. That's all. So we'll see. We'll stick it out. All right. I'm going to wrap up today's final hour session probably around 3:45. I got a webinar at the top of the hour. I will share that link. I think it's in my Telegram here. Let me go ahead and post that. So this webinar here, see if I can copy this link. This is for 4 p.m. daily profit play webinar. This is if you're in my class already, this is not a webinar for you. This is a webinar for more students, for more opportunity for me to show what the strategy is and get people into the sessions for tomorrow. Okay, so that's the 4 p.m. webinar. On the, I'm trying to think, my Discord channel, I'll share that at the end. The Discord channel is growing. I did a prune last week and kicked out some inactive members, which is good. The chats are coming in nicely. Everyone's pretty active. That's awesome. That's what I built it for. I'm not trying to make the Discord channel cumbersome. I'm going to continue to organize it where my education updates are coming in. I added in the practical options right here. So when that is ready, this will become an official link. The full version will be $497. The basic version will be $47. There's still going to be a ton of value packed into both of them. The basic version is going to basically cover 2 strategies, the full version covering 13 strategies. So obviously trying to deliver a big amount to justify, why the different prices, and also a lot of additional like reference material for us to know, you have enough to be practical and you can apply strategies right away, but you also have the reference material in the full version to then talk the talk and know the terminology and put real examples together of why we trade the way we trade based on certain Greeks, if you will, which are obviously important options, but it's the stuff that just confuses people and you see their eyes gloss over and they're like, options, oh my gosh, I don't want it to be like that. I want it to be very, very simple. Okay. So it's taking complex things, it's trying to make it very simple, very uh, realistic to actually trade it. And so hopefully within a couple hours education, you're applying practical option strategies. You're in sessions like this, and you're sharing like, hey Chris, I like this strategy. I really I'm going to do it on this stock. Cool, great, do it. So now right? So anyway, I'll finish that up. Weekly windfalls. We had a great session yesterday. We talked about a lot. We spent about an hour and 30 minutes yesterday in live session. So this is a class I run every Monday around 11:30 a.m. I've got a webinar coming up on November 12th. That's a few weeks out, but there's a registration link if you'd like to join that. That's myself and Nick Syack from A1 Trading. Then if you're a non-US Forex trader, I've got some opportunities to copy my robots. I have my alert service. I have my daily profit play. So, I'm trying to keep here with education updates. Anything that I'm doing is all right here so people can find it. You can also reach out anytime. You can find me, the real me, in the free group chat every single day. I just try to ask everybody, it's public. Okay. Everything I'm doing here is public. I don't like direct messages. I don't send friend requests. I keep it out here in the open so you know how to find me. Okay. So anyway, no need to beat it up. Okay. Let's see what else we have going on. Oil, like I said, don't break the ice. I think we're gonna tap this floor If we want to see inflation pressures going lower over the coming months, we probably need to see oil breaking this floor. I'm not trying to be a hero and call support. Okay, that also doesn't make me a bear to sell oil. I mean, at this level we're breaking support, I would rather consider a sell trade on oil if this happens. If we break and retest and then go lower, sure, I get a chance to sell there and have oil stay below a certain threshold over a course of 30 to 60 days and see if I'm right. If we have a false breakout and oil rips higher, then okay, fine. But I'm just not trusting the fact that we've had a escalated Middle East conflict going on and oil is still making lower highs and lower lows. So I just think be careful on oil. I'm no longer in any CL positions. I'm looking for natural gas, which also gapped higher? You got to be kidding me. That is a wild swing on natural gas. Look at that. From down yesterday to up today, that's a 23% swing in natural gas. What the fudge? That's crazy. 2% on contract expirations, forecasts, and more. Well, if I don't get the opportunity to trade natural gas, so be it. I'm just hoping this. I don't know. If it pulls back, great. If it doesn't, good riddance. I'll never trade it. Gold, all-time highs. I still like gold. I think it's a great place to be. It's outperforming every index this year. I said this earlier in a stream today. Did you know? Fact of the day: gold and the S&P have never been up 25% each in a single trading year, ever. Okay, year to date. Let's look at this. Year to date, where do we start? I think gold is over 30% for the year, and the S&P is right around 22% for the year. Let's go into January. See if I can find January. Okay, so let's find the open for the year. Here we go. This is day to day. Let's go to there we go. Okay, so right here was my open. All right, so we had about a 3.5% pullback to start the year off in gold, and we are sitting up 34.65%. Okay, 34.65% in gold. SPY, I'll go SPX. Let's go back to January. We started out with this tiny little pullback in January right here. So year to date, right in here, was this it? That little pullback right there? Yep. So this little pullback right there, we pulled back around 1.33%, and we're sitting up current price around 23%. Okay. So we've got gold up 34.65. We've got the S&P currently up 23.15. We've never seen the market up 25%, 25% ever. Now, that doesn't mean it can't happen. That just means it's going to be another milestone that this year's created. So is that an impressive run? Yeah, but the weird thing about that type of performance in gold and silver and Bitcoin even against the indexes is, why is that the case? That's usually not the correlation. Usually you don't see dollar strong, index strong, gold up, silver up, Bitcoin up, all these things that are just like risk on, but then you've got dollar that should be risk off. You got yields that are up, you got bonds that are down. Interesting correlations to say the least. So I think you could say safely broken correlations, but keep in mind, if we cross that point, and maybe that's what you'll start seeing in Twitter, it'll pop up on headlines like, oh my gosh, gold's up, over 30% for the year, and the index is up over 25%. It's never ever happened before, blah, blah, blah. Maybe they try to spin it like it's a good thing. Okay. I just think it's a rarity. And, eventually that party is going to come back to a reality check in some capacity. I don't know what it is. Maybe gold keeps going. Maybe the market breaks. Maybe the market keeps going. The bonds break. Maybe Bitcoin. Who knows? But there's going to be winners and losers. We're just trying to make sure we don't get caught on the wrong side of something. Okay. All right. So that's final thoughts there for, just little factoid for the day. We go into currencies. Let's go to currency strength for the moment. So the pound is on top today, euro and dollar just above baseline, Japanese yen all over the place with volatility finishing at the middle. CAD's a little bit softer, Swiss and New Zealand and Aussie down. China stocks today were not super impressive. I think they were in red a little bit on the day. Let me go ahead and check here at the bottom. So HSI up 0.49, Alibaba flat on the day. So we gapped higher, faded that. Baidu, we gapped higher and faded that. Bit of a red candle. FXI, 32. Let me see on this one. I think I have a trade on FXI. I might close this out if I can. Let me take a look. So FXI, let me take a look here. I've got 10 contracts in. Let me try and see if this is going to close out. So I was in the trade for Looks like 27 cents. And I can close it out now for a loss. So I'm not going to do that, obviously. All right, I'll take my chances. Crap. I think this was, maybe it was just because I looked at it after hours yesterday, but this is out to the end of the year. This is a FXI is a December 31st. So if we see this getting up in price to $33, $34, this one should be fine to close out for partial profit. The next is KWeb, gapped up, fading. MCHI, not much there for the index play. I have a $42 covered call on JD.com for Friday. If it's not, let me see what this is trading for right now. I don't know if my roll is trading for mostly profit. If I've got a debit, let me see what my JD roll is. So right now, $42 covered call. If I close it, nope. I want this to trade. If this is trading less than 10 cents, I might close it and roll it if it happens sooner than later. Otherwise, if we get at least a steady move and we get above $42, then I will take this and get called away for about $590 per account. So that's an income play on JD. I will continue to mess around with that one, maybe. JetBlue had a big miss in earnings. I believe today they were up like 730, now down to 606. That's a big miss in earnings. Still holding some shares of JetBlue. Have some puts out there, 555 and 450. I do have some trades that I'll be watching over market. We've got Snap, which has earnings. It's I believe it's today after market. Is that correct? Let me check here on Snap right here. Snap is after hours today. Let's take a look at the stock. So I own some shares. I bought a call this morning during my live session for the daily profit play. That was just a sprinkled in bonus play because I wasn't taking a trade this morning. It didn't look good. I felt like, Maverick when he was coming back into flying for the first time. He's like, it doesn't look good. Doesn't look good. Okay. And then the guy's name? Sundown. He's like, we could have had him, man. So hopefully I get my SPX to close out below 58.55 and grab that full profit today. So Snap with earnings after market. Let's see if we can get up to this gap fill. I'd love to see Snap pop up here towards 12 and change. We're looking at the expected move out to Friday to be about a $2 move. If we go from current price at 10.85, that'd be up to 12.85. Anything above 12.76 to me is looking pretty good. I would say with my call option, if we are up here by tomorrow, I'm going to close out that call option. For the shares that I own, if we're up here, I will probably put in a 10 or 10.50 or $11 call, lower the cost basis, and get it called away at a price that gives me a little bit of a premium. I bought 500 to 1,000 shares of Snapchat, and I'm trying to turn it into an income play. So if this pops up to give us a gap fill or even blows through that, which would be really, really nice. If that does happen, then I'll probably take some profit, almost immediately. I don't know if I really want to wait until Friday. I don't have to. If we pop up, it's like, if it pops up $1, that's $1 on 1,000 shares is a pretty good income play. But I also bought a put at $8 just in case this thing rips lower. So if we have a huge disappointing move, then I'm looking to see if an $8 put will gain in value. I'll close it out, also lower the cost basis, and then just aggressively repair this thing. But if we have earnings to the upside, technically, this looks okay. We've had lows here since late October 2022 and December 2023. Early this is May 2023. Or is that 2022? Yeah. So 2022 lows, 2023. This year tested in the summer months when August sold off. So we'll see if this support is strong enough to hold. If it is, let's go up. So hopefully Snapchat works out like that. Okay. What else? Took a trade. Let me see. I'm looking at my A1 Trading Discord channel. New trades on the day. Snapchat, Visa, AMD. 2 trades on AMD. PayPal, Caterpillar, Amazon, Tesla. I actually put a new trade in on Tesla. I had a nice play earlier where the 225 by 220 proved to be a really nice profitable trade. Right now, I've got a 270 by 265 with the intention of taking some shares to own Tesla. This is out to January. I may use the 265. If we go down to fill this gap, I might look at protecting that put. So the 265, take it down to maybe $25 to $35 of profit. And if I get assigned, I get assigned, but I'm looking at an ownership price probably in the 230s or lower. So I'll see what this does. If this is just a big gap that is going to hold here for some type of bull flag and we break out and go higher, well, this income trade works out just fine with the credit spread. If it falls aggressively to fill the gap, then I'm going to use the long put, take some shares, and aggressively work my cost basis lower, turn it into a bit of a wheel strategy, and try to flip this thing for $5 or $10 a share because the premiums are that good. For an at the money call at like 30 days out, you get like $9 to $15 for a Tesla trade, which is pretty impressive. Not a lot of stocks can do that. So that's why I like it. It would, give me, let's say 2 to 3 months, I could probably lower my cost basis by $20 on Tesla, which isn't bad. That's lowering it by just under 10%. So, all right, that's a little action happening here. What else do I have going on? I've got some hedges out there. I haven't talked about those in a little bit because they're just there. I have some hedges. I hedges on the Qs, hedges on ES, MES, MNQ, Qs. We'll see if they're needed. I've got them. If they're not needed, then it's a calculated risk of a quarter 1% to half of 1%, and they're out through the election, November 15th into the first part of December, and then I can reapply if needed. But that's just part of the territory of trying to manage and make sure that the downside is protected if something gets silly. Right? We go to the 10-year. Like I said, the 10-year is something to watch. 10-year a little bit high at 4.27. What would be kind of nice to see by the end of the year would be this. Okay. If this is making lower highs in a way, I would kind of like to see this happen, where if we can kind of cap out and work our way back down, that would put a little bit of relief on this, this rising yield pressure. We could see the bond market stabilize a little bit. I'm not long bonds and I'm not long yields. I'm just wondering if the bond market and the yields are going to tell us something that's going to break the market. So I would be a little bit more nervous if this continues just to rip higher, because that is showing that, hey, if investors want to buy U.S. debt, they want to get paid a premium for it. And that's what essentially the bond market is demanding. So if yields are up, bonds are down, take a look at your 7 to 10 year. 7 to 10 years been topped since the rate cut in September. The TLT topped out same time. Excuse me. Topped out at the same time. I'm so happy actually that I closed it. I'm so happy. I was trying to get this thing up to 105 for a calendar spread, and it was close. I didn't need to close it all the way, but I was in at 82 with the sell at 105, and it was up here towards $100. And I said, good enough. I think I made like $4,000 per contract or something like that. $4,000 maybe per account. So it worked out to be fine. But man, if I were to close it out now, it'd be pretty much worthless. So that's a big win in my opinion for at least closing out the trade a little bit timing wise. But I'm not in bonds, and where would I get interested in bonds? Honestly, I probably get interested if we're back down to these lows or slightly lower. Then I'm more interested in long-term bonds. But that's just one allocation. TLT. Let's say we break to 75. Let's say we go from 75 to 100. Just throwing random numbers out there, okay? Let's say we get to 75 and we make this divergent bottom. If we go from 75 to 100, okay, that's a bond yield of about 30%. That's pretty good, right? In fact, for a bond, that's very good. But how long does it take? I don't know. And does something crash in the interim? Are there better opportunities to just buy dirt cheap indexes and equities and see it rip back and outperform bonds? Maybe. Give me 1 second here. Okay. So there's the other thing I'm watching closely. This might be the saddest number of the year, the 30-year bond or the 30-year mortgage. At one point in time, right in that September window for the rate cut, down to 6.08, market's all excited, and here we are 50 basis points higher. So again, not sure what this means. I don't think you can trade this technically necessarily, but it would be lovely to see this thing going down again. If the Fed goes from 5.5 down to 4.5, how do you have a 30-year mortgage going from 6% up? That doesn't make any sense. Okay. But if the yields are rising, this will go with it. So that is a very counterintuitive situation to have the Fed rate lower, but yields are higher, and therefore things that are derived from those yields, like a mortgage payment, could be higher. I hope that's not the case. So we are expecting to see the Fed still stay the course and cut another 25 by November, December. That is still per the watch tool here. So the Fed watch tool, it's still in like the 90% probability, I believe. 98.9%. That's a lot better. Who remembers September, by the way? Do you remember that in September, this was like a 50-50 pretty much going into the rate decision? That was one of the more challenging rate decisions that we've seen. And even to that point, nobody knew if it was going to be 50 points or 25 points. This tool was actually correct. It was like a 54% probability that they cut 50 basis points, and they did. So this tool did get it right. But man, it was really, really close. And it was all sorts of ebbs and flows. We saw like 70-30, 80-20, 60-40, 50-50. And that was right up to the day that we saw the rate decision. Now it's obviously a little bit more probabilistic that we're going to see just 25 basis points coming off again November 7th, which is right after Election Day. That's a Thursday FOMC, if I'm not mistaken. And then Friday to wrap up the week. So if we go into next week's trading, so obviously this week's all about earnings. We got PCE, we got non-farm payroll, we had a missing jobs, Joel's job openings today. We go to November 5th, that's Tuesday, you get your election. The one thing that's going to be a little bit sketchy on the election is, will the election results be in and official? I don't know. That's probably my biggest concern going into next week is election night says one thing, but then there's states that say, we don't have the tally yet, we don't have the official winner, we can't conclude, blah, blah, blah. And this goes day to day to day to day with no declared winner. Do the markets absolutely get destroyed because of that? No, but there's just going to be a lot of volatility and chop. So I don't know what's going to happen next week, but I think there's a lot of volatility to just make sure you're not doing anything stupid. Like, don't over leverage, don't trade too large. I think it's safe for us to be absorbing any type of volatility as opposed to trying to go crazy and really step on the gas when the market's not really giving us any clear direction at this time. So elections on Tuesday. Thursday is the Fed. You got Bank of England in the morning. You got the Fed in the afternoon. Still looking to see that 25 basis points cut. The press conference, it'll be interesting what Jerome Powell says. Where's our inflation reading coming from? We won't know until probably the second week of November because we'll have CPI and PPI in that combo. Then we'll have PC at the end of the month. Then we get into Thanksgiving and the holidays. So really, does the market care that much? I don't think so. I mean, if we see typical seasonality trends, then we could have a lot of noise during the election. So this could be, a very noisy window where price is very choppy, right? We could have like a nasty hiccup to the downside, and then the market buys that dip into the end of year rally. I would say that's fairly probable. If I'm, looking at percentages here, I'd say that's probably like a 60 to 65% probability that we're going to end up higher by the year and maybe have a decent leg higher. I'd be surprised if the market can give us 10% more for the end of the year, but I think 3 to 5% is manageable. If we break the all-time highs by another 3 to 5%, where does that put us? If we get up 3%, that puts us above 600. If we get up 5%, that puts us up around 615. So I'd say between 600 and 615, that would be a pretty solid window for those bulls to achieve by the end of the year if we can get there. If Bitcoin continues to run, awesome. If gold continues to run, awesome. If the market wants to go higher, awesome. I'm just hoping the market doesn't fall apart, and all of a sudden it's like, oh my gosh, are we getting prices like a black swan event that nobody sees coming? We talked about all these scenarios. I think that's what makes it unlikely is everyone thinks recession. Everyone thinks the debt spiral. Everyone thinks that the U.S. is going to fail and the U.S. is going to default. It hasn't happened yet, but everyone keeps talking about it. And these markets are surprisingly contrarian when it comes to stuff like that. So I don't know. I almost think it's better to watch these markets, balloon up and bubble up and get crazy high and capitulated where it's like, now is when you want to be cautious, right? It's nice to enjoy those runs, but those typically end in a catastrophic fashion. So that's what I'm more cautious of moving forward. But if we're just sideways and just a little melt up higher, that's fine. But if we get aggressively bullish, then typically those end very badly. Aggressively bullish, if we blow through these technicals here, then I would be way more concerned if this is super inefficient, that this market's going to come crashing down in a pretty decent way, right? I mean, this 200 EMA still hasn't been hit. If we stretch really far away from it, I will be worried about that stretch coming all the way back down to that 200 EMA, which just gets me all the trades to protect and also gets me ready for, a heck of a discount to hopefully own it and also even profit. We can profit from any type of bear move too. So let's be ready. Up, down, sideways. We're trying to make some money. Yeah. Okay. All right, everybody. I'm going to take a little breather here. Any questions? Any questions? Any charts, anything you'd like me to take a look at? Okay. If not, I'm going to get ready to prep for the 4 o'clock webinar at the top of the hour, daily profit play. Just going to share with some interested traders. And that link's been posted. It's right there, prosperitypub.com/challenge. Tomorrow morning, I'll be live for the daily profit play at 9 a.m. I will be actually tomorrow's schedule. Got a couple of bonus things going on. So actually, let's see. Tomorrow morning, 9 a.m. for daily profit play, 10:15 with A1 trading. I've got a webinar with Graham Lindman at 1 p.m. and then my final hour session at 3 p.m. That actually gives me my window to finish up the couple of videos I need to finish with my practical options. So hopefully by tomorrow, videos are done. I'm getting the on-demand pages ready. And by Thursday, Friday, we can share that and actually have the link ready to rip. So looking forward to that. And like I said, if you're a lifetime member for my daily profit play or lifetime member for my waterfall income, or you are a gold VIP member for the A1 trading bundle with my Pulver alerts, then I will include my practical options course complimentary as a thank you from me. I think that'll help get you up to speed. Implied move for AMD. Yep, let's take a look. Let's take a look. Would it be okay into the close? I mean, it's a cash settled instrument mark. So wherever it closes officially would be where you're marked. So if it closes right now at 58.43, as long as your strike is above, let's say 58.50, 58.55. I mean, we have 16 minutes for the close. If I want to get out of my SPX trade just to be safe, I mean, we're probably going to have to pay like 5 or 10 cents on that debit, but this is my trade. Right now it's trading at a 1 cent debit, and my middle price is a 5 cent. So I could close for 40 cents down to 35 cents if I can get filled at 5. But I guess the trick is, as long as price doesn't rip up 12 points in the next 16 minutes, which anything is possible. For the day, SPX is up from the bottom to the top today. I think it's up like almost 0.8%. We had a move of about 0.77%. And did we do anything crazy? This is last week's high. Didn't do anything to test the high. We came back up to yesterday's high slightly. So we broke yesterday's low and also broke yesterday's high. That's a pretty sloppy day. Let me do this. I'm going to be on the safe side here. I'll take the 5 cent debit if it lets me close it. So let me see what this shows. I'll hopefully close it out at 5 cents. So 1, 2, 3, 4, 5 cents. I'll try to get 1 cent. I doubt it's going to fill me there. Yep. We'll try it. Nope. So that backfired. Let's try 5 cents. Close. 5 cents pending. If it's not filling at 5 cents, I'm not going to fill it at 10. So I'm just going to cancel the order. I'm going to let it go cash settled at the end of the day at closing bell. Okay. Lynette, yep, I'll get that $47 one ready to rip too. I'll have those both ready to rock and roll. Okay, so we've got 15 minutes left for the close. Trying to think what else. Oh, AMD, implied move for AMD, sure. AMD should be like a $12 mover. That's what the market makers are showing right here. So if I go to AMD for Friday, $12.44 is the implied move. So we're trading right around 167.05. I put in, what's my AMD trade? I went out a little bit further on AMD. I just did a bull call spread, 160 by 162.50. Paid $1.15, going after $1.35 max profit, and then I put in one for December for 220. I'm paying 220 to get 230. So I'm just looking to see by the end of the year if AMD goes higher. If we get one, post earnings, if it pops up higher, great. I mean, let me look at the chart here. If AMD has a positive push with earning, I mean, this is actually a good looking sign. So the 160, I mean, heck, we're 15 minutes away. Could I close this for profit now? Maybe partial. Let's find out. The November, so let's go 160 by 160 by 162.50. Right now, that was a $1.15 debit. What can I close this one for? I'm only getting 35 cents. I'm going to let it run. So if price goes higher, great. Tomorrow, I mean, all the IV is probably going to go down. So the implied volatility on earnings looks like this. Okay. If we have earnings and it comes out positive, then the IV is going to shrink to this. So once earnings is done, you just get that big deflation. And our trade, which is right now showing $1.45, which is positive by 30 cents. If this is over, let's say, $2, then I can close it out for partial profit and be done with it. But I mean, I'm looking to see if I get out for the max 250. That will happen at expiration. So going out another couple of weeks, if I get this thing at like $2 to let's say 215, that's fine. I mean, max 250. If I get 2 to 215 for it, I'll take 80-85% of the profit and move on and not have to wait a couple of weeks. Or I just sit on it. And if it's above 160, 250 by the 15th, and we're going higher on semiconductors or higher on AMD, great, easy win. Okay. Let's see here. My close order is still at 20 cents. I mean, I'm sorry it's being a pain in the butt there, Mark, but you're probably going to see just some just less liquidity at the end of the day. I mean, unfortunately, that's probably the reality. Which I know it's the SPX, but right now, I mean, I think you're good, dude. I know you're in for 70 cents of 5 contracts, but the odds right now of going to what's your call side? That's the only one that'd be threatened. It would be your call side. Your put side's going to be fine. We're at 5,800. We have to drop 45 points in 12 minutes, which is unlikely. So the put side is probably very safe. The call side is trading at a 5 delta. It's unlikely we're going to move up 11 points in the next 12 minutes. But just saying, I mean, cash settled should be fine. And I mean, you can call the trade desk and ask, like Phil's saying, you can call and ask, but most likely they would say if you're trying to put in a 5, 10, 15, 20 cent debit, they can't override it. I mean, if that liquidity is not there to fill the trade, it can't fill. But the good thing is if your call side is out of the way, it just cash settles at 4 p.m. and close out for a full winner, and you'll take your 70 cents, right? Okay. All right, so a little bit more to watch there. AMD, about a $12.40 move expected for earnings. If they come in positive, I hope that's the case. It'd be nice to see this thing, gap up and push up. Now, that gap up and push up could also pull back. I'm very aware of that, which is why I'm going a little bit further on my earnings play and a little bit further for my end of the year rally if we get one. Okay. But I'll keep an eye on that. Got the trade to close on SPX hopefully by the end of the day, and it just stays below 58.55, which would give me full profit. And in about 11 minutes, I'm going to fire up the webinar for Daily Profit Play. And those of you that want to join, more than welcome. Let me post that link one more time. I got to grab it out of the chat here. So it is copy link, 4 p.m. Eastern Time, Daily Profit Play webinar. There it is. If I have members that are into this session, either watching live or recording, if you'd like to join my Discord, you can. Here's my Discord. Here's a 7-day invite. So Chris Pulver Trading Discord. There we go. And then my free Telegram, same thing here. Chris Pulver Telegram. Okay, so both are free to join. All right. If you're coming into my Discord channel, just real quick disclaimer, it's getting better hopefully with the recent purge that I did. I cleaned out the channel. I do this every week where I just double check and make sure we don't have any like imposter Chris Pulvers. I don't send direct messages. I don't do friend requests. So if you come into my channel and that happens, just ban that profile, period. Okay. It's not me. I can promise you it's not me. So if something like that happens, just ban the profile, help me clean up the channel a little bit. The channel itself really easy to follow. I've got updates, chats for everything, free group chat for just general stuff, Forex, stocks, options, futures. Anytime I go live on YouTube, it pops up in that YouTube channel. If I post a blog, update on Twitter, any type of analysis, charts, private instruction for workshops, that's individuals and small groups, and then any type of discounts with software services that I run, introducing broker stuff. I've got it out there on my affiliate discounts channel, and then some legacy education, real-time news, then testimonials, scammers. So try to make it straightforward, pretty matter of fact. Cool. All right. 9 minutes left. Price is looking better. That little move to the downside kind of freed things up on my side. Now my call side is a 2 delta and my put side is a 1 delta. Probability is pretty darn high that this trade closes for full profit. So not that worried about it at this time. Got 8 minutes left. Mark, hope you're in good shape, dude. And let me know if you got filled on that trade, by the way. Maybe you got out for that 20 cents you wanted. Okay. All right, cool. Top of the hour, starting out the Daily Profit Play webinar. If those want to join me for the webinar, great. If you want to get into the service, great. I'll be live tomorrow for the service itself at 9 o'clock Eastern time. And a nice little bonus for anybody that's in my Daily Profit Play or in my Waterfall Income. If you are in as a 1-year service member, if you wanted to upgrade to the VIP or upgrade to Lifetime, I'm going to include that Practical Options course free of charge. So it's an upgrade for you, but that's a lifetime for no renewal fees. And I will gladly give you that Practical Options course in full, just so you know. So just a little incentive if you want to upgrade and stay in the services with me. Okay, still in. All right, Mark. High five. Ready? 1, 2, 3. 7 minutes left, dude. You got it. All right. I'll see you tomorrow. All right. Thanks, everybody. Daily Profit Play. If you want to pop into the sales webinar, I'll be live at 4 p.m. Everyone else in my services, traders, I'll see you tomorrow. Have a good rest of the day.